Welcome back. My name's Chris Gosselin from Australian Fund Managers. Earlier this week, we had inflation figures coming out for the March month, annualised 4.6%. As we normally do, we're discussing this with Renny Ellis from Arculus Funds Management and Nicholas Chaplin from Seed Funds Management. Gentlemen, welcome.
Hello.
Morning, Chris.
Thanks for joining me. Renny, let's start off with you. What was your view of the number and what do you think the RBA will do next Tuesday?
The number came in as expected. The RBA trimmed mean number came in flat at 3.3. That's the focus of the RBA. It's a little too early to be recognising the inflation in the system. So I don't believe that the RBA should be increasing rates next week. Federal Reserve overnight hasn't increased rates. Last month, none of the other central banks increased rates, only the RBA. I think that the RBA needs to sit and wait here for at least another few months.
Thank you. Nick, your view?
Yeah, well, I think the expectation of the RBA happened. I was surprised that the trim mean was at 3.3. They've ignored, which is more or less they're putting the increase in prices in oil, in diesel, in gas into the temporary bucket and suggesting that shouldn't be counted. I would maybe question that a little bit and suggest that it's worth more than that, particularly considering they raised rates in March on the basis that it was going to happen. They went in March, they went in advance of 2 unemployment numbers and 2 CPI numbers, and they knew that the number that was going to come out on April 29 was just a few days before they were to meet again. So obviously my view then was that they shouldn't have raised and waited till now. They also seem to be constrained by this 25-cent move only mentality. So it's got to be little bits of 25 cents one way or the other, whereas they could have done nothing last time. And if they really felt that it was trim mean and the trim mean being flat is correct, they don't need to do anything this time as well. So in that way, Renny, I agree that, and the next meeting I think is mid-June. So they could, take some ice and have a think about it till June. But the numbers were, I wasn't surprised by anything other than the fact that the trim mean didn't move up a little bit. And perhaps that speaks to what they didn't, or what they've put into that temporary bucket that perhaps they shouldn't have. I'm hoping there's no manoeuvring going on in determining that trimmed mean, but that's not for us to work out.
Just on that, Nick, then again, for the Reserve Bank to be adjusting monetary policy, almost 5 minutes before the federal budget, that's not good economics management either. They should wait for the budget and have a look about the impacts. There's a lot of things being talked about in this budget relating to housing investment, negative gearing, capital gains tax. These things potentially could have a big impact on the economy generally. The Reserve Bank should be holding fire with this meeting and saying, let's just have a look at the budget first. We can revisit this in June.
Okay, well, there'll be a lot of consumers who'll be very happy to hear your view on that. They'll probably just be hoping that Michelle Bullock is also listening to you.
And Chris, we've been saying for a while that if you consider that the RBA has at its disposal a blunt tool in interest rates, and we need more to be done fiscally from the government perspective, this is precisely that right time to do that. So the impacts of fiscal stimulation, one way or the other, can be longer term, and that's something that it seems to me that the RBA hasn't got the patience for at the moment. They seem to be reacting very quickly, again using these 25 basis point moves instead of going 40 or 50 if they need to, one way or the other. As I say, I'm not suggesting they need to raise rates by 50 points. I'm suggesting that they made the decision in March to preempt the CPI spike, which occurred and everyone expected it to, and it did come out. I actually thought it may have even had a 5 on it in terms of core CPI, and it was 4.6. So it's not a bad outcome for something that's temporary. If the trim mean is still above the 2 to 3% band, then there's more work to be done, but they have raised rates twice. Just wanted to keep that in mind.
Is there not a risk that these so-called temporary items are basically created by the Middle East war become more permanent? So how long do they stay outside the core?
Well, I think that's a really important question, and that is, how temporary is temporary? How long does this have to go on? We haven't got the answer in Iran yet. That's definitely has become a much longer scenario than 2 to 3 weeks, which we were told at the end of February. So it could be something that's wrapped up quickly and we move on and Cuba's next and whatever, or it's something that drags on for a long time. The IRGC isn't shifted out of Iran, and you've got a mess there, basically for months, if not years. The oil scenario could play out a dozen ways. It's 20% of the world's oil. It's not 100%. Does that mean that it's more about selling Venezuelan oil down the track than it is about solving the problems in Iran? That means that the market has turmoil for quite a while yet to come.
Okay, well, let's leave it there for the moment. Your view, both of you, as usual, you are in unison, singing from the same song sheet, well, slightly different song sheets, but certainly with the same outcome. Let's wait and see what the Reserve Bank does next week. Gentlemen, thank you. Look forward to seeing you after the Reserve Bank decision.
Thank you, Chris.
Thanks, Chris.
Thanks, Renny. Thank you, Nicholas.